Hello and welcome to another session of the CFO Connect Summit. I'm your host, Isabel Woodford. I'm a senior reporter at Sifted. We report on VC, startups, and I personally cover fintech. This panel is about 45 minutes. We're going to give you hopefully all the insights you need on investor perspectives on fundraising, growth, and leadership. And who better to give you those insights than two of the best known VCs in the space. So just some housekeeping. We're going to do this sort of in three parts. So the question is fundraising, growth, and leadership. So we'll address each of those parts. And then there'll be about 20 minutes at the end for Q&A. So please do, throughout the session, as they come to you, post those questions and we'll make sure that we get to those. So let's kick off. These two don't need an introduction, but I want to make sure that they get a chance to give you a brief overview of what they do and what they focus on. So very quickly, Julia, if you'd like to introduce yourself before we get started.
Thanks, Isabel. It's a pleasure to be here, and I'm super excited to join Lucille on the panel and talk everything about fundraising. My name is Julia. I'm a principal at Index Ventures in the London office and focus mainly on B2B and fintech. Index Ventures is a global fund, dual headquartered between San Francisco and London, and we invest from seed all the way to IPO. Examples of our companies are Revolut, Robinhood, Figma, Deliveroo, or Spendesk, to name a few.
Brilliant. Thank you so much. And Lucille.
Hi, Isabel. Hi, Julia. Glad to be here. My second session at CFO Connect, so really happy to be here. For a reminder, H-Roads is also a global fund. We have offices US, Asia, Europe. The whole team in Europe is in London, but from London we cover all the European region, and we very much focus on scale-ups, so companies that are having initial product market fit and really trying to grow their teams, grow their go-to-market, and oftentimes go international. We invest all across sectors, from consumer, B2B SaaS, fintech, which is one of my areas of focus, and obviously healthcare.
Brilliant. So let's talk about the big question, which is fundraising. So our audience, I think today will be mostly kind of the growth stage, Series B, AB onwards. So if we think about that context, let's start with thinking about the perfect pitch. I'm not sure that exists, but I would be interested in hearing, first of all, Lucille, what it is in a pitch that gets your attention, and also what happens if a founder isn't a natural orator. That would be kind of a big question, I think, for a lot of people.
Yeah, I think first of all, you use the word storytelling, which I think is probably a very good word for pitching. It's all about telling a story and telling the genesis of a company, the initial idea, how people met, what pain point you were trying to solve, how things have evolved, where are you today, but more importantly, where you want to go in the future. And I think it's almost something I try to remind myself of when I help people prepare for fundraising. Is it's all about telling the future. So it's not about telling the past. And sometimes people are like, oh, here are my numbers, here's what we've done. Those are only milestones that help you create a story and tell the future to the investors, because we're mostly here for those next steps and for the ambition that you have. And so I think it's always good to have a good balance of both, and just use the numbers and the materials to give credit and credibility to your story and what's going to happen next. And maybe to address your question about being charismatic and good at pitching. I think it's such an interesting topic. We think a lot about that ourselves as VCs, not to be too biased by people that are good at pitching, because being good at pitching doesn't necessarily mean being good at being a founder and creating a company and executing on the vision. It is important to be good at pitching to some extent, because most of what you do is pitching, right? So you're pitching obviously investors, but you're pitching next employees, board members, and maybe one day public investors if you want to list your business. So there is a lot of pitching in being a founder. But on the other hand, I've definitely seen people that don't necessarily come across as polished the first time you meet them, but actually have delivered fantastic outcomes. And so the last thing I'll say is probably that's why I encourage people also to get to know investors ahead of a raise, because what certainly helps is also for us to track people over time. And that's something we give a lot of importance as well, is if I meet you 6 months before the raise, and you say, hey, Lucy, we're going to release this in the product, we're going to go and open an office, and then you come back and you're like, oh, I've done all of those things. I say, okay, wow, like great testament to your execution. And so having that ability to track a founder over time helps also develop confidence.
So don't be shy to go into your inbox before their fundraising. It's a difficult balance, isn't it, Julia, between ambition and kind of being realistic. And I know that I think VCs generally say sometimes they pass because founders aren't ambitious enough, and others say some are just, in their own world. So striking that balance between ambition and, being truthful, how do you do that as a founder?
Yeah, I think echoing a bit on what Lucille said, for us, it's not really about a founder being charismatic. It's more about, passion and grit and integrity and ambition, as you said. So, not everyone will need to fundraise to build a great business. So we just need to find the founders that really want to go for huge outcomes, which was the one that we would like to back, because obviously, as VCs, we want venture backable businesses. So it's just finding with founders that think on the same scales as we are. And then really on the founder is more about the motivation for building such product. Is he mission driven or is it more opportunistic is a big question for us. And then we would really evaluate the domain expertise. What in this founder's background gave him an edge or unique angle on the market, giving him the opportunity to have a differentiated approach. And finally, coming back to the ambition, does he have a chip on his shoulder to build a $1 billion business? So yeah,
you look for that chip on the shoulder, like you want that hunger. I think my brother once said he likes to hire people who've like been through a breakup or something, just because they have that extra drive. Is it something like that, or is it? I mean, what does that chip look like?
Yeah, well, it's a very interesting example that you give, right? Because that's why I think investors really like second-time founders. Or for example, if you look at founders that have sold the business maybe a bit too fast and were frustrated about it and they thought they could have done better. And so that these people are really driven because they've already done an exit and now they want to go for something way, way bigger, right? That's just an example. Not everyone has to be a second-time founder. But
okay, and in terms of telling that story to investors and trying to communicate what the vision is, what are the metrics that the CFO can draw? And I know that, Lucille, you have a lot of thoughts about engagement and what are the right engagement metrics that people should bring to a pitch. But what are the ones that the CFOs in particular could be looking at to try and support that fundraising mission?
Yeah, my advice maybe on that would be to really think about holistic metrics about the business. So everyone will think about financials and putting a business plan and margins and so on. But there's so many other things that matter. So I would always try to think, can I have any metrics around engagement and usage of a platform, which is something we really like, because number one, I think it's great that you track them. So sometimes people don't track that. So how many days people, log into your tool in a month? How many hours do they spend when they use it? How many people in a company log into your tool? Whatever is relevant to that specific business, I think is great because it shows it's being used. People enjoy being in the tool. Obviously, one that we see more and more is NPS, Net Promoter Score, which is really, would you recommend someone else using your product, which is a great way just to show satisfaction. And again, something we would really like to see in general. And finally, one thing that I encourage a lot of our portfolio companies to track is eNPS, which is employee NPS. So how satisfied are your own employees? What's the turnover in your company? And it's increasingly an important metric in this world where there's a real war for talent. And in Europe, with all the fundraising happening, everyone wants the best scale-up talents to join a company. So it's really hard to retain good people. And you can't afford to just pay up because there will always be someone else that can pay more than you. So it has to be around the mission and your ability to keep people and provide an atmosphere and a culture that they like. maybe to give an example of Spendesk, which is hosting us today, they always had a very strong eNPS. I think they got voted like the best fintech in Europe to work for. Yeah. And to me, that's one of the most important metrics in the business, because I think there's something fundamentally right if people enjoy working for this company, right? Mm. And equally, we have seen companies that look very good on the financials, but you have a lot of employee turnover and thinking, something is quite not right here. Like we need to figure it out.
Yeah, that's interesting that you say that. I mean, Spendesk, is an example of a company that repeatedly shows good employee satisfaction. But on the other side, I mean, I'm biased because I report on fintechs, but I report a lot on Revolut's executive turnover and World Remit. And so you do see this tension between growth actually and employee satisfaction. And it's very interesting when you see on Glassdoor, CEO approvals actually begin to drop as growth becomes. So it's sort of an inverse correlation. So Jodie, maybe you have some thoughts there on how, if employee NPS is dropping as a consequence perhaps of aggressive growth, how would an investor see that relationship, and would you temporarily accept perhaps a decline in employee satisfaction for that growth potential?
Yeah, I think it's something that we see a lot, right? Obviously, when a company is in hyper growth and hiring 50 people per month and onboarding like a lot of employees at the same time, it becomes harder to make everyone happy. And also with all of the friction that the business is going through, employees on the ground are working a ton and it's hard for some people. So what we always recommend to our company that's reached that stage is really, hire ahead of people as soon as possible, work on the culture, work on retention, and finding ways to onboard people on the mission as much as possible so they feel part of the story, because obviously that represents a risk for the business. I mean, a business is nothing without its employee, right? So yeah, definitely something that we see.
And on the kind of the founder side, how important is it to you that the founder is a CEO as well? So often, that founder does step back to a chairman role. Is it important to you that you have that founder be the kind of the lead of the company throughout its journey, or maybe you guys have different opinions on that? Julia, on that one?
So for us, we think we want to see founders that are like leaders, right, of the business, at least in the first stages of the company. So we would be looking for companies that are founder-led. Yes, is the answer, because we think that it's the chances for success are higher when the person that's leading the company is the person at the inception of the idea, and that the person that's passionate about what they're trying to solve.
Yeah, is that the same for 8 Roads?
Yeah, happy to comment on that. Definitely still true at our stage. So I would say Series B, Series C, we still see mostly founder-led companies. I would say, though, sometimes you have that question about later on who's the best person to lead the company, which I think sometimes can be a healthy question. And I'm thinking in our portfolio, for example, Made.com, which just listed on the stock exchange. Over time, Ning Li, who was one of the best creators and in fact created a new business called Typology, now very successful in France, decided he was probably not the best person to continue managing the scaling up of Made, and hired Philippe Chenieux, who we knew from Mythique and has been a fantastic CEO for Made. So that was actually a really nice, good transition. And not something we brought on, by the way. So sometimes people are like, oh, do you have an ultimate plan to change the founder? Like, we never do, because similar to Julia, like, we invest in people thinking they're the ones. Like, we never invest thinking we're going to change them, otherwise we wouldn't make the investment. But it's a healthy conversation to have, especially when companies become a couple of billion. I think you've seen it with Monzo, where Tom was saying, I'm not the right person. So you see it increasingly, and it's a healthy conversation.
And okay, just before we move on from fundraising, because this is obviously about CFOs, how often do you meet the CFO in the fundraising process? Are they often the person brought along to that kind of Series B pitch, or is it more a chief of staff or a coup? Julia, do you have much interaction with the CFO in the fundraising part of things?
Yeah. So as I mentioned before, at Index, about 75% of our deals are seed and Series A. So while this stage is obviously, it's rare to have a CFO, and we're most often in touch with the founders directly. But later stage, yes, a big part of the fundraising process is most often driven by the CFOs themselves, especially on everything data related and metrics related, obviously. And where we have a lot of touch points with the CFOs is with our own company on the later rounds that we raise with them, is helping them structure their data room, structure their pitch, and prepare for the next waves of investors.
Okay, interesting. And Lucille, do you see them in the process often?
Very much so. They're not always part of the first pitch. Usually that's probably the CEO who gives that. But quite quickly, especially because we invest in later stages where there are metrics to look at, definitely spending a lot of the time with the CFO for better or for worse for them. But it's a big part of the conversation, yeah.
Okay, brilliant. Okay, so let's move on to the broader conversation about growth. We touched on it there and some of the consequences, including employee satisfaction. For CFOs watching, again, there's a tension for them between kind of fueling growth and also, in moments of downturn like COVID, also having that conservatism, which naturally I think comes with that financial positioning. So I'm interested, Lucille, when you're advising your portfolio companies about that kind of getting that balance right and seeing CFOs do that. I wonder if you've got examples of where that growth versus caution has been done excellently in your experience.
And do you mean in planning or in executing? So,
but both.
Both, yeah. I mean, the first reaction I have to your question is I think we're in a market which rewards growth, especially in technology. There's no question when you look at the public markets in the US, for example, but even in Europe, it's a lot about momentum. It's a lot about engagement and usage. So I still think we're in the market where momentum is probably more rewarding than unit economics.
Right.
It doesn't mean that we don't look at them. I think what's important in general is what I always like to understand is how do you make those decisions? So when we talk about, for example, investing in sales and marketing, no amount or no metric scares me in itself. What I'm always trying to understand is how did you make those decisions? Is there a level of return on investments you're happy to make? And how do you think about it? And there could be very good reasons. I'll give you an example. Like there could be businesses where they're replatforming their core or they're changing their margin profile, and they're saying, well, I'm willing to invest in users because I know in the future they're going to be more profitable than they are today to me. So I'm kind of willing to do that. Or another example would be expansion, which a lot of our companies have. If your customers have very strong net revenue retention and they expand over time, you might be able to say, initially those unit economics don't look so good, but over time, I know that those people are going to stay with me and keep expanding. So it will be worth the investment. So I think it's more a question of having a good understanding of who makes the decision and why, as opposed to a specific amount of burn that would scare me in itself.
Okay, very interesting. And again, actually, just to kind of twist that question slightly for Julia, again, in that growth conversation, there almost seems to be two camps between the hyper growth and the profitability push, particularly in fintech. And I imagine that for CFOs, this is almost an ideology. Either they subscribe to it or they don't. And so when you see a CFO, do you ever see the CFO sort of, we need to be pushing for profitability? And occasionally the VC or the founder has to say, not yet. That's quite a difficult ideological tension, probably.
Yeah. It's a tension that we see. And, it is true that today, most of the time VCs are pushing for growth. And obviously the markets are favorable today, and it's easy to raise at higher and higher valuation. But what we always do, the real question is, what will it be worth when it finally IPO and when that becomes public? So while we're always looking at this trade-off growth versus margin, and trying to like go for growth, but while keeping in mind that this margin is going to have to be positive at some point. So putting in place the infrastructure for it to become profitable and having a real like solid plan to make that happen is something that we always keep in mind, obviously.
Okay, interesting.
Maybe just to add to that, Isabel, I would say the one thing I would try to avoid is a lot of burn and not growth. So that's the way. I think it's okay to not grow too fast if you're you're profitable or good unit economics, or to say I'm really going for growth and I have strong momentum. What becomes a bit dangerous is if you're burning a lot and there's lack of momentum. That's where things start to be a bit more tricky. So that's why we always try to say, like, as long as you're growing fast, it's fine, right?
Yeah, I guess that is interesting. We've seen lots of the bigger companies see growing losses and declining growth rates, which again might be common, as you mature. Is that what you mean? Maybe you don't want that actual, the relationship between losses going up and growth slowing. Would that not be a particularly attractive?
Well, declining growth rate is kind of mathematical because when you start to be billion of revenue, it's just really hard to obviously like grow 100% year on year. So it depends. If you're still growing, it could be well worth it. But yeah, that's definitely what I mean. Like that's the call you need to make is what level of momentum am I getting for that burn, and what's the level where it starts to be a bit questionable.
Okay, and is there do you occasionally see a CFO who has taken a company through that hyper growth stage? Do you ever see it necessary for that CFO to occasionally be replaced by the CFO who's going to get you to profitability? Have you seen that sort of switch in leadership occur? Maybe Julia?
I have not seen that switch at all, but I'm less involved at growth than Lucille, so maybe that's a situation that you've come across.
Yeah,
it's not. I don't think it's a replacing of the CFO. I think it's more usually it's a board conversation. So it's more what in general it's more like what are we trying to show? So are we trying to show adoption, momentum, and then at some point, if you want to list, depending on which I'm thinking consumer businesses, for example, at some point it might be good to show profitability. So usually it's more about conversation. Doesn't mean we change the CFO, but it's more deciding what do we collectively care about. And that could become over time when you're a bigger company, showing that you can make profit, for example.
Okay, and changing that mindset. On the question of growth, and perhaps, as you said, sort of maybe stalling growth, at what point does the conversation around a pivot become sort of kind of come to the table? And do you have any examples of portfolio companies that have decided to make that pivot either earlier on or later on, which has been executed well? That could either be in a revenue sort of pivot, or it could be kind of a more dramatic business model pivot. I have several examples that you've seen in the fintech world, but I'm curious from the VC perspective. I mean, I imagine that's quite intimidating to see this company you've invested suddenly change course. Sometimes that is necessary, but interested to hear your perspective when a CFO or a founder comes to you and says, we're changing tact. Lucille?
Yeah, I was trying to think about examples in our portfolio. I'm not sure I have a great one, but usually we see pivots early on, I have to say. So I can't really think of an example where we pivoted like at Series C, even though I'm sure there are some. But definitely we see them when we invest earlier, and I'm sure Julia sees them all the time. And they're great, by the way. So it's all about iteration. So also the name pivot has something like sometimes a negative connotation where to me it's just iterating models, right? So sometimes, especially when you invest in new things, the question is what's the right model to sell this? What's the right pricing? So we see people changing from consulting to software to bundle to do you charge payment? Do you not charge payment? So you see a lot of that, and I personally welcome it because I think those things are not theoretical. So you can't like look at a page of paper and think, oh, that would definitely be the best business model. Like you just need to try and see what works to your stakeholders. And sometimes you have surprises, right? Like people want to pay on subscription, for example, sometimes, and they say actually we would be better. I have an example, actually. One of my companies is called Interaxio, which is a platform doing remote interpretation. It's a company based in Lithuania, and they help the European Parliament or the UNO to do all the effectively the remote interpretation for the sessions. And initially, they sold credits for every call. You would consume a credit. And the question was always like, do we do more like a Zoom model or a hop-in model where you become like a subscription? So those conversations are always ongoing. I'm not sure if it's like a radical pivot, but it's more like business model pivot, if you will.
Yeah, and I think a very interesting point you made in the pre-call was about seeing how founders respond to feedback and how they iterate. So perhaps you also encourage seeing founders who can take data and then say, we're changing because of this. We're responding in the right way to data. Julia, again, same question to you about that pivot and growth relationship.
Yeah, for us, obviously, we see it quite a lot at early stage, and it's very healthy. I mean, the founder, they have a vision and a problem that they want to solve, but we expect them to be iterating and adjusting a lot on the model until they hit a market fit and they really see this market pool. So it's a very healthy process, and it's actually something that we'd be looking for in founders, right? Will they be able to navigate the market evolving, or will they be able to navigate all the data points that they be finding out along the way? So yeah, it's something that we really encourage. And sometimes it's the founders iterating on their product and trying new things with customers. Sometimes it's inbound, actually. You build a product for some types of customers and you see that the demand is somewhere else, so you just like redistribute it to someone else as well, and that's a very healthy process.
Okay, interesting. So we've had a lot of questions come in. So clearly people are sick of me. But before we move over to the audience questions, I wanted to touch on that last element, which is leadership, and just have a couple of questions on that point. I'm curious. I mean, obviously we're all women, and I think this is becoming a very important topic generally about kind of how startups and companies broadly have an eye to gender and other forms of diversity. And I think that's important when we think about leadership as well. So Lucille, if I come to you first, I mean, how diverse are your portfolio companies at the leadership level? And is that something that you're paying growing attention to, not for the sake of diversity, but because all the stats suggest that that is a better composition to have from a business perspective?
Yeah, very much so. So to answer your question, we have more and more women founders. I think 2 of our last investments, in fact, have been women-led businesses. So Small in the UK, which is a brand of household products, and Proximi, which is in the healthcare space, have both women CEOs, but not enough. That's the first part of the answer. What I see much more of is diverse leadership teams. So I think we're still lacking female founders, but we see much more, CPOs, CFOs, chief people, probably not as many CTOs, which I would love to see more of.
Yeah.
But, I think it's been improving a lot. And I think now there is more and more that feeling of, when you present the team page and there is like only white male on it, I think now people start to understand like, oh, maybe I don't have the most diverse. And it's, as you say, it's not for the sake of it. It's also because you're going to bring so many different experiences and thoughts to your process, which I always thought it was interesting because most companies are selling both to female and male customers. So why wouldn't you have a diverse team leading that company, right? And same goes for obviously nationalities, for religion, sexual orientation, and so it's not only about gender, which I think we talk a lot about, but it's diversity of backgrounds. And that's another thing I encourage a lot my founders. So sometimes you see a team where everyone is like ex-McKinsey. So as much as I like ex-McKinsey people, I'm thinking like, shall we bring people that have a completely different background? Because if we all have the same backgrounds, we're probably going to come up with the same answers, right? So again, like it's diversity in the broad sense of the term.
Yeah. And Julia, I mean, again, is this important in leadership, or is it growth and everything else?
Yeah, I think at Index we're we are seeing and funding increasingly diverse teams. I think the industry recognized the problem and is definitely taking steps to improve. My latest seed deal was a female founding team, two incredible women, which I'm super proud of. And we really encourage our founders and all of them to think about diversity in their leadership teams, in their boards, and all across the company, really. So a very important thing for us to in general as a topic.
And by the way, board might be a good place to start sometimes. So if you feel like you're not going to replace your CFO because he's a male, right? but board could be a great place because again, I'm thinking about Made. We had a wonderful chairwoman, Suzanne. So you can add non-execs, you can add investors, but also so that could be also the place to start. So think about it that way as well.
Okay, and just before I hand over or look at the audience question, sorry, is there a great leader model that you can think of? Perhaps that's a leadership composition, or perhaps that's an individual that you think that growth startups, they need to have certain qualities as leaders. I mean, it's a very broad thing. I'm sure that leadership looks different in different companies, but Lucille, maybe there's a couple of things that you really are drawn to in terms of leadership qualities.
It's a very interesting topic. We run a survey ourselves around what we call the entrepreneur DNA, precisely to try to understand that question and see, are there any commonalities around the best startups in our portfolio? And the answer was none. The answer was none. So there is really another thing like, like they repeat or not repeat, or they did that MBA or they didn't. They have this background. Like the reality is, you see huge diversity of profiles.
Yeah.
When I reflect on things, though, I think the one thing, and it's my personal opinion, but the one thing I realize is the best companies and the best founders I've worked with have just a different velocity to things. So that's something I've observed, is the speed of action and the speed of delivery, like the speed of iteration is higher in fast-growing companies. So, and that's what I meant when it's good to meet VCs ahead, because that you won't see in the first pitch, right? But actually, sometimes you talk to someone, and the next time you meet them, they're like, "Oh yeah, that was a great idea. We did that and that and that." Or thanks for the tip. I met already that person. I actually hired them. You just see that it's just like another speed. And we're not investors in Hopin, for example, but when you see like those companies, going to unicorn, I think at a fast pace, or Kazoo, which is one of ours. That velocity is unprecedented, right? So I think, to me, that's probably the only thing I would say.
Interesting. Okay, yes, no model from 8 Roads. Julia, do you have any insights there on kind of a leadership model that you like?
Yeah, similar to Lucille, we always look for a founder's market fit, and there's different flavors of entrepreneur we work with, and everyone's really different. I think when I personally think about leadership and what would that mean for a founder, I'd be really looking for someone that's passionate and obsessed about a pain point, but also magnetic enough to onboard people with them. Sort of like this type of people that manage to have everyone follow them in their crazy ideas. I think that's a very strong trait for entrepreneurs, and something that we see in a lot of our successful companies.
Interesting. I guess that's sort of, as journalists, you also pick that up from different founders, that sort of magnetism, and sometimes not, but they're still incredibly successful. Okay, so let's go to our audience. I'll go with the ones that have been most upvoted first. So Ilana has asked, what are the typical mistakes to avoid for an early stage company trying to raise funds? So clearly someone who is at an earlier fundraising point. So Julia, you're probably best versed to speak to this one. The mistake. So again, we talked about ambition, lack of. Is there anything else there that early stage founders should be thinking about and avoiding?
Yeah. Well, going back to the pitch, the pitch is crucial in the fundraising process at such an early stage. And one thing that I'd say is it's incredibly important to remain very crisp and to the point when you speak to investors. I would just focus on this, and can you in 30 seconds explain all of your business, from the pain point to why it's important, to who are you selling to and how are you going to reach out to them.
Right.
A lot of times we see people that sort of gets lost in the details or lost in a demo, and then they don't manage their time properly, and they're not in control of the meeting, and they forgot to mention the most important points about the business. And then so I would really focus on being prepared for that storytelling, and being succinct at communicating your excitement for the project that you're building.
Okay, interesting. I'll leave that one because obviously Lucille does later stage. Unless Lucille, you have anything there that you want to jump in on?
No, I was going to say similar, like don't go too much in the detail. There will always be times to do so. So similar to what Julia said, like it's important to have more the high level story. And the other thing, which sounds obvious, but don't lie.
Yeah.
And I know it sounds a bit flippant of me to say that, but I like sometimes, like, it's tempting. I like people who are humble, right? So sometimes, like, I'm like, what's the stage of this? And people are like, oh, we just haven't had the resources to do that. Or what's the likelihood of, that pipeline? Or I think I would always prefer someone who tells me how it is, that tries to make up for, like, it's not like, we're not trying to find holes. So I would rather someone who's going to open with me and say, well, to be candid, that's one of the areas where we need help. That's someone who pretends they know it all, right?
Yeah,
that's really good advice. No Theranos in Europe, please.
And another thing that I was just going to mention, sorry, Isabel, is during this whole pitch, I would really encourage founders to be themselves and remember that this is a two-way discussion and not a monologue. It's you're talking to investors and they're evaluating you while you are actually evaluating them. So I'd really try to create these personal connections with investors and assess whether or not these could be long-term partners for you and for your business, is something that sometimes founders forget.
Yeah, exactly. Okay, that's brilliant advice. Thank you. Ifti's asked the question, do you think you can get a better valuation in the US than in Europe, assuming in the fundraising stage? And Julia, I know you were saying it's more competitive in the US. Index obviously invests across both continents. I mean, what do you think about that question about better valuation? Should a founder go to the US to get a better valuation? Julia?
I don't think that's the case anymore. I think today what we see is that US investors are all over Europe and investing in France, in Germany, in the Nordics, in the UK. And I do think that the valuation are more and more aligning between the two continents.
Yeah, and obviously Asian investors over in Europe as well. Tencent, very active, also in France. Lucille, what do you think about that, about the valuation point?
Yeah, I was going to say, I don't think it's true anymore. And case in point is all the US investors are opening shop in Europe. So they're definitely coming. I think more broadly, the good news, the reason for that is because Europe has been able to demonstrate also consistently now in the last, couple of years, the creation of, multi-billion dollar company, which wasn't the case before. So if you could say in a way, in the past, there was a reason for that disconnect. And I think the very good news for all of us is that it's stopping, because not only because US investors are coming, but more because Europe has shown now, like, the ability to create those massive companies. And when you look at, I don't know, at the end, at 70 billion or 80 billion market cap, Spotify, I mean, those are pure European companies, far-fetched, right? So those are great stories, and people are seeing that and saying, okay, now Europe can really build those global leaders from here.
Yeah, definitely. There's also a conversation there about what happens on the public markets. And if you don't have a presence in the US, then the valuation is obviously not going to be complementary. Okay, another question, a very practical question from Raphael. He's asked, how much runway should a company have when starting the Series B process? I assume there's a fairly typical formula here to think about. Julia, what would you say about that runway before the Series B?
We always encourage to have at least 6 months. At least that's what I say to my portfolio company. Usually fundraising processes are way faster than that, but just in case let's say there is something that we didn't expect, or it's not working as planned, just so you have some time to think through another plan and find another solution and don't run out of cash.
Okay, interesting. And Lucille, do you broadly agree with that, 6 months or so?
6 to 12 months, I think that's fair. There's also this saying like raise money whilst you can, and certainly I think given how hot the market has been, I also see, at least in our portfolio, companies raising much more often than they used to. So there could also be, if you're hitting some great milestones and you say, we could accelerate if we had even more power, even more capital in the bank. There could be also a reason for fundraising again, even if you don't need to, which we see more and more as well.
Interesting. Oh, and there's also obviously the option for a bridge, etc. Before that. Okay, brilliant. Another question again from Ifti, who's asked, I think, quite a pertinent question about debt. And we've seen the likes of Pipe in the US doing revenue-based financing and bringing that to a marketplace and to scale, and also some European startups doing a very similar thing to Pipe. And if he's asked, in the US, debt is taken a lot earlier than in the Europe typically. Do you think European scale-ups give away equity too soon? It's interesting asking VCs this, because obviously if they take debt, they're not giving VCs their equity. But Julia, do you have any views here on revenue-based financing and taking debt and when startups should do that, and if we're leaving it too late in Europe?
Yeah, I think, a lot of our company, they complement an equity fundraising with some lines of debt, some venture debt. And I think that's very smart. Is just an option, right, to go a bit further and give you more buffer before you have to raise again for your next round, especially for cash intensive businesses. I think it makes a lot of sense to consider that option.
Mm-hmm.
Yeah.
And is it earlier, do you think, in the US that option's on the table? Do you agree with that?
The companies that I've worked on that are actually fairly early. It's like Series A company. So, I think European startups are starting to realize that option as well and going a bit earlier.
Okay, interesting. Lucille, what do you think about the debt?
We very much encourage it. I think there's a whole range of options, by the way. So from venture debt to revenue financing that you mentioned, to factoring, to a lot of government helped finance, like we had during COVID. But also, I know in France that you have a lot of options. So usually it's more of a complement than a replacement for VC money. But definitely a good thing to have. And I'm thinking, for example, in fintech, with companies that have regulatory capital obligations, or sometimes cash that needs to be trapped somewhere, debt is a perfect use for that. Another great use for debt is M&A. So we have a number of companies have a line of debt that they don't draw, but they have it, and they know if we find a target that we like, we can act very quickly. We don't have to start from scratch, try to find a bank, try to raise a deadline. Then they have that deadline and they know they can draw on it.
Yeah.
And that's something I would recommend more and more companies to look at, because I think M&A is a great way to grow, sometimes to complement your product, to grow internationally. And it's still something that a lot of startups are reluctant to do, and sometimes for good reasons, because they think they might get distracted. But we've seen a number of companies like Kazoo, like Treatwell in our portfolio, where M&A was instrumental in growing the business.
Okay, really helpful. Perfect. The next question is from Matt. His question I will condense, but the essence of his question is, can a company be too old to pivot? And indeed, would that be off-putting when you see older companies coming to you who are pivoting at a later stage? Lucille, I'll come to you first. Do you always invest in companies that are in that early 2-3 year old stage, or do you sometimes see older companies come and they've changed line? Is it ever too late?
I think it's a very good question. There is a little bit of that feeling. I'll say we're guilty of sometimes seeing what's new, right? Like, well, how come it didn't you didn't, how come you didn't find product market fit for all those years? That being said, there are plenty of examples of it happening. And the first one that comes to mind is UiPath, which you might or might not know, but was a company that was very small for 10 years. And then suddenly, obviously, hit a fantastic product market fit and to become, what we know today. So certainly there are cases of sometimes being too early in the market, or a number of reasons why a company haven't found the product market fit and suddenly things are changing. We also see it with COVID. So COVID has been a great accelerator in some markets where, there are certain companies that were doing remote work or future of work pre-COVID, and obviously suddenly you have an acceleration of things. So there could definitely be great reason for it to happen. So I wouldn't overthink it if there is a great story to be had, right? I wouldn't think, we're too old. As I think, as we were saying with Julia, there's no perfect pitch, there is no perfect story. So hopefully investors are smart enough to look at things individually and think, that's very interesting in its own right.
Yeah, don't overthink it. I will draw another example. I interviewed the CEO of Hinge, the dating app, a few months ago, and he was telling the story of when they redesigned the whole app essentially, and when they went back to investors, basically they were a few years old, and they said we rebranded, and investors weren't interested, and they eventually got bought by Match.com. So I do think that there has to be, as you say, a story there to try and bring investors in, because it can potentially be that warning flag, even great companies like Hinge. Julia, do you have any views on this?
Yeah, for us it's similar. I mean, it's not at all a deal breaker, but we'll ask the question, right? So understanding, is it the execution of the founding team that didn't work out, or it was the market just not ready, or is it just maybe a technology that's very complex to build and maybe you need 4 years to build something that's as complex? It's just understanding the reason behind it. And then, if it's a good business, it's a good business. We'll be interested, even if the start was a bit slower than what other companies that we see now in the market.
Do you have any examples of that in your portfolio, do you know, of those older?
Well, for example, in my personal portfolio, a company that I invested in recently called Birdie, which is a vertical SaaS for the home care market. Mm-hmm. We invested Series A, and they had already been around for 4 years. But the truth is, they pivoted, and you asked earlier about a pivot. They had started with a consumer product, and then they realized that the compelling opportunity was on the business side. And then, this is a regulated space, and you need a very complex product to service the home care agencies. And so only after 2 years of development, the traction really picked up. And now it's, going really, really well. And we're super happy to have invested. But, we ask, what happened during the 4 years before your fundraising?
Interesting. Okay, I mean, that's fascinating. I think that's all we have time for. But they were brilliant questions from the audience, so thank you so much for that. If you'd like to continue the conversation, there is a breakout room called Fundraising and Financing. It's like a table. There's only about 15 seats, so run across to that if you want to join. I think Lucille and Julia may pop in as well to say hello, but more importantly, the CFOs watching can take part and discuss within themselves. But thank you both for joining, and thank you to the audience. I hope that was an interesting discussion. You can find me at sifted.eu and on Twitter, and similarly with Lucille and Julia and their funds, and we hope to see you very soon. Thank you.
Thank you.